Coming up on the program, IMF offers bailout to second African nation, and that's Uganda, in less than a week. South Africa's ESCOM extends power cuts to Friday as plans fail. And Algeria resumes commercial flights after COVID border closure. Hello and welcome, and thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwagu. We get the show started now with the market numbers. It was more of red colors amongst the markets we track here in Africa, with just the JSE index in the green at intraday. The index was up 0.18%. As at 12 noon, the EGX 30 was trading marginally low. In Egypt, the EGX 30 was also in the red, down 0.55% at intraday. Kenya closed 1.58% negative on Tuesday. The story was different in the Middle East, as the markets there were all in the green. In the UAE, both the Abu Dhabi market and the Dubai financial markets were 0.19% and 0.07% up each. Elsewhere, Saudi Arabia outperformed, up 0.39%, and the Qatari index was up 0.25%. And in Europe, stocks were mixed this morning following lackluster sentiment seen across other global markets. For more from the European space, Ashutosh joins us now. Hello, Ashutosh. Good afternoon. Well, the EU has reached a deal to force large corporations to publicly declare how much tax they pay in each member state. How effective will this deal be in cracking down on MNC's efforts to avoid paying their fair share of taxes?
Well, good afternoon, Chimi. Well, that's the big question, really, isn't it? The proponents of the deal say that it is going to help fight the tax avoidance by big companies. It is going to force them to pay their fair share. Tax avoidance is a big cause of worry here in the European Union, and countries lose somewhere between 35 to 70 billion euros each year due to tax avoidance. So the proponents do feel that this is going to bring more transparency as to where they're making their revenue, the companies are making their revenue, how much tax they're paying there, because it is going to break down really their data on a country by country basis. However, the tax activists, they say that the deal does not go far enough. They are unhappy about the fact that the deal only covers the European Union's 27 countries plus a handful of those countries' tax havens which have been blacklisted by the European Union. For the other countries, these companies just have to declare an aggregate amount of revenue or tax that they pay there, or revenue that they earn there. So they feel that this is really not right, because there are so many countries which are not part of this blacklist that the European Union has, and that's the reason why scrutiny on companies actually won't be that robust because of this.
Bloomberg is reporting that joint efforts by Germany and France to bring medical production back to Europe has hit a wall. What more can you tell us?
Well, yes, so the report says that Germany has been going painfully slow as far as this project is concerned. That's probably because federal elections are just around the corner, a few months away from now. But this is a cause of frustration for France. It wants to get going on this project, wants to move fast. Really, we've got to see the background in which this idea actually took birth. This was at the height of the pandemic, when supply chain disruptions actually caused major shortages of medical equipment, PPE kit, masks, and essential medicines. So that's the reason why France wants to act fast. It does not want to caught off guard in the future when perhaps another pandemic was to take place, or another such supply chain disruptions take place. But for now, the move on this alliance has been pretty slow from Germany's side. Germany itself has been taking a bilateral approach when it's talking with the US to actually ease some of the supply chain issues as far as active ingredients are concerned, as related to vaccines and other stuff. But the alliance per se has actually hit some sort of a wall.
All right, let's look at the markets now. European shares have been hovering around record highs. Yesterday, we saw a slew of data, and today the Eurozone Producer Price Index was published. How much of these data is fueling optimism in the markets?
It is essentially the data that was released yesterday, and that's the main factor behind it. We saw that the DAX here, or the Stock 600, they were at record highs even yesterday, and today they are hovering around the same levels. Factory activity has been at record levels, and which means that there is a strong orders that these factories are processing, which actually implies that a strong recovery is in sight. Perhaps the European Union is coming out of the double-dip recession, and there is growth going to take place in the second quarter. So all these are the positives, and the traders are actually balancing this positive news stories with the fear of inflation and what implication it could have as far as the ECB's rate decision is concerned. But so far they feel that the ECB is not going to tighten the money taps anytime soon. The ECB itself has said that most of the moves that are fueling inflation are transitory in nature. The energy prices and things like that, and supply chain disruptions, they are going to actually go away as the economy normalizes. So that's the thing they're actually looking at this point of time. They're balancing with the growth prospects as well as the inflation fears. You mentioned the Producers Price Index. That also came in above expectations, and which means we got to know a part of it yesterday itself in that the PMI data that came out yesterday, and that these factories are actually now are actually being forced to increase prices, which means that sooner or later consumer prices are going to go even higher.
Thank you very much for updating us on those. Ashutosh, hope to see you tomorrow. Enjoy the rest of the day.
Thank you.
Meanwhile, the UK has moved a step closer to joining a major Pacific regional trade bloc as it tries to force closer trade links with the Asia-Pacific region after its exit from the European Union. For this and more, let's talk to Juliana. Hello, Juliana. Good afternoon. Well, earlier today, the 11 members of the CPTPP agreed to start negotiations for Britain's entry into the regional free trade agreement. What reactions are you getting about this? How much of CPTPP standards has UK been able to meet?
Good afternoon, Chimezie. We're not really sure about the details of what the application process will look like. The British government have released some information saying that as they go through this transition period, they will be releasing and publishing all literature as it pertains to this deal over the recent weeks. But this is a massive win for the International Trade Secretary, Liz Truss, who has been dotting around the world trying to forge these new post-Brexit agreements as Britain tries to kind of economically shift its force and energy away from the EU to other parts of the globe. Now, I know that trade between Britain and the 11 member states of this bloc was worth about $110 billion in 2019. And of course, once, it's all signed on the dotted line, that will be worth a free trade agreement. So it is a massive win for Britain. This is actually the first time the bloc is going to be letting in an outside member state. I know there were discussions that were held during Obama's era, and I believe Trump quickly vetoed against that. And then there have been discussions about whether or not Xi Jinping will let China in the bloc. So the fact that Britain is going to be the first member and it's a European state does make that region a lot more appealing. So it's definitely a big win, and a big win for Boris Johnson ahead of that all-important G7 summit, which begins next week, the first major global international summit that isn't going to be virtual, but is going to be actual.
Interesting. Well, also on the radar today is UK mortgage approvals for April and Bank of England consumer credit. What are those data saying?
Yeah, more confirmation basically that Britain's housing boom is still very much happening and shows no sign of waning just yet, although there is a massive debate at the moment about whether or not a bust is going to be coming. According to the Bank of England, mortgage approvals were up more than expected to 86,921 in the month of April. It was about 83,500 in the month of March. Again, this has got lots to do with the race for space. So many people are ditching their city pads and are moving to the country where you get more for your money, a bigger garden, and a place to fit 2 cars in your driveway, if that's what takes your fancy. And of course, as well, there has been the suspension of that housing tax. So if you buy a property up to £500,000, you don't have to pay stamp duty, which has really fueled people going to get a mortgage. The only difference is consumer credit net borrowing is down. So there are discussions again about whether or not, we are going to see an end to the housing boom yet. But according to the data today, absolutely not.
All right, bring us up to speed with intraday market numbers and, of course, their drivers.
Yeah, the FTSE all-share is down slightly at intraday, down by about 0.06%. The FTSE 100 is down 0.03%, and the FTSE 250 is down by 0.09%. In currencies, the British pound is up on the US dollar by 0.06%, up on the euro by 0.23%, and up on the Japanese yen by 0.23%. The British pound is actually down on the US dollar currently. One of the big stories at the moment is about Wizz Air. They are another budget airline, European budget airline run by the Hungarians. They've reported a loss of over €500 million. No surprises there. We've seen these trading updates from their contemporaries, EasyJet, Ryanair, Lufthansa. They've all really been struggling during the pandemic. Their shares were trading down on the FTSE 250. I think one of the big questions that have left many people asking is what is going to happen to the aviation sector over the coming months. A lot of people are expecting there to be a boom during the summer, but there are still so many restrictions, and there are talks of another surge creeping up in Europe, even though the inoculation programme is going so successfully.
All right, thank you very much, Juliana. Enjoy the rest of the day and see you tomorrow.
Thank you.
And shares in Asia Pacific were mixed today, with official data showing higher than expected growth in Australia's economy for the first quarter. The Nikkei 225 in Japan gained 0.46%, while the Topix index climbed 0.84%. In South Korea, the Kospi closed nearly 0.1% higher. Hong Kong's Hang Seng index shed about 0.6%. Mainland Chinese stocks declined on the day as the Shanghai Composite fell 0.76% and the Shenzhen component slipped to 1.17%, while Australia's stocks advanced, with the S&P ASX 200 closing 1.05% higher. And U.S. stock index futures were little changed in early morning trade on Wednesday following muted action on the first day of June. Futures contracts tied to the Dow Jones Industrial Average gained just 18 points. S&P 500 futures traded around the flat line, and Nasdaq 100 futures were fractionally lower. During regular trading on Tuesday, the Dow gained 47 points. Now, inflation fears and the ways in which the Federal Reserve might respond have weighed on sentiment recently, although the major averages are still hovering around all-time highs. And oil prices rose again this morning after OPEC and its allies stuck to their plan to cautiously return oil supply in June and July, while expecting fuel demand to rebound strongly during the U.S. summer. U.S. West Texas Intermediate crude futures rose 32 cents to $68.05, extending a 2.1% gain following the Memorial Day holiday in the United States on Monday. Prices rose to their highest since October 2018. Brent crude futures climbed 37 cents to $70.62 a barrel after jumping 1.3% overnight when it hit its highest since March 8. We'll take a break, and when we come back, we'll look at the implications of U.S. sanctions on Ethiopia, on its economic development. This is Business Incorporated. Do stay with us. The recent decision by the U.S. government to impose sanctions on certain Ethiopian government officials because of the ongoing crisis in Tigray has continued to generate comments. So some analysts believe the measures are narrow and targeted at the moment, but it highlights the plight of Tigray and the ongoing political and security tensions in Ethiopia. Let's hear from Matt Kiniger, Associate Practice Lead Sub-Saharan Africa at Frontier View in London. Hello, Matt. Good afternoon. Thank you for joining us.
Hello, good afternoon. Thank you for having me on the show today.
So how will the U.S. sanctions affect the investment climate in Ethiopia?
Yes, so it's a good question to ask. So certainly the sanctions do send a strong message to the Ethiopian authorities. However, in our view, we think the sanctions, or the impact of the sanctions, will likely be very limited in terms of investor sentiment and the investor climate at the moment in Ethiopia. And this is because, as you mentioned during your introduction, that the sanctions are very targeted on specific individuals in government. There are no financial or broader sanctions or broader economic sanctions in place yet. These are the ones that would have the material impact on investor sentiment and the economic outlook for the country. So generally, we do see investors still viewing Ethiopia very favorably, despite these targeted sanctions by the US government. And this is because the country has quite a strong growth rate. The government is continuing to open up the economy, liberalize sectors of the economy. The Safaricom-led bid that was successful in bidding for the country's first private mobile phone network a couple of weeks ago is a very good example of this. So there is substantial investor appetite in Ethiopia. If, however, sanctions do tighten or the conflict in the Tigray region does worsen, then we could see a bit of a weakening of investor sentiment and the investor climate more broadly.
So do you think the conflict in the Tigray region threatens Ethiopia's economic outlook?
So, I mean, even with the Tigray conflict, we are expecting the economy to grow by about 4 or 5% this year and about 6% next year. So these are very, strong growth rates by sub-Saharan African standards. However, I would say we have downgraded our view for the growth outlook for Ethiopia compared to our previous forecasts. And it also, the growth outlook for 2021 and 2022 represents quite a substantial slowdown compared to the sort of 9 or 10% annual growth that Ethiopia was registering before COVID. So part of the reason that we are forecasting slower growth is because of the Tigray conflict. It's kind of it has an indirect impact on the economic outlook. And this is because the government will be forced to divert more resources towards the armed forces, which means that government finances, which are already under pressure, will feel more strain. And we could see a slowdown in investment in infrastructure, for example. And we could also see a slowdown or a weakening of agriculture production, especially in the north of the country. And it's also worth noting that the country is struggling with annual inflation of about 20%, as well as pretty severe difficulties with foreign currency access, especially for the private sector. These issues are not directly related to the currency and inflation issues are not directly related to the Tigray conflict, but we do expect the conflict to probably aggravate them over the coming year or so.
So what risks will businesses face during the general election that is planned later this month?
This is a really interesting sort of topic at the moment. A lot of our clients are asking us what is going to be happening, or what should they be looking out for over the next month or so, as the election is due to be held at the end of June. So very broadly, we do see the elections later on this year as a potential flashpoint for protests and civil unrest, especially in rural areas of the country where ethnic nationalist sentiment is the strongest. And we certainly can't rule out the emergence of new ethnic political fronts or armed ethnic political fronts along the lines of the Tigray People's Liberation Front in different parts of the country. And so this certainly does present quite a significant risk of, new conflicts emerging beyond the Tigray region. So we would say very broadly, companies should anticipate a bit of a weakening of investor sentiment in the very short term, a bit of a softening of customer demand, business conditions in the very short term. But our base case view is that it probably won't fundamentally derail the growth outlook this year. And Addis Ababa and the main transport corridor to Djibouti probably will be mostly unaffected by the worst of any political violence or unrest. And so most businesses operating in urban areas probably won't be directly affected for the foreseeable future, even if there is some post-election unrest.
All right, let's just hope for the best. Thank you very much, Matt, for your time. We do appreciate it.
My pleasure.
And the International Monetary Fund has agreed to provide a $1 billion facility to Uganda, the lender's second bailout to an African nation, in 4 days to help the continent's economies mitigate the impact of the coronavirus pandemic. The loan to Uganda comes after the IMF staff on May 27 agreed to provide $1.5 billion to the Democratic Republic of Congo over the next 3 years, and following the fund's provision of more than $15 billion for sub-Saharan African nations since the pandemic hit the region in 2020. The latest deals need final approval by IMF management and its executive board. The funds will help Uganda, Africa's top coffee exporter, and Congo, the world's biggest source of cobalt, recover from the pandemic that has reduced income and pushed 30 million across the continent into extreme poverty. And South Africa's struggling power utility Eskom says it will cut power supplies nationwide until Friday after more breakdowns at some of its facilities. The state-owned company would extend cuts of 2,000 megawatts from the grid because of shortages caused by 2 plants' failures. Eskom, which has faced delays in restarting 2 other generating units that were being serviced, said it's been forced to ration power further after exhausting emergency reserves. The Stage 2 load shedding will be implemented from 10 a.m. on Wednesday morning until 10 p.m. on Friday, June 4. And Algeria has eased border restrictions with a return of some international flights on Tuesday, June 1, following months of closure due to the coronavirus pandemic. Passengers returning to the country are required to present a negative PCR test taken less than 36 hours before boarding, as well as another 5 days following their arrival in Algeria. Passengers are also required to quarantine in a hotel on arrival for 5 days. Algeria, an oil producer, closed its borders and suspended flights in March 2020 when the global pandemic struck, only reopening them to humanitarian flights from France between January and March this year before another wave of infection began. And that's a wrap on the program. Thank you for watching. I'm Chimeze Obi Iwagu.